European defense stocks had a breakout 2025, but so far in 2026, that rally has taken a breather. Is this consolidation creating a new opportunity? Joining me now is Joe Grogan. He's head of distribution Americas at WisdomTree. Joe, great to have you on.
Thank you so much for having us. Really appreciate that.
So investors have spent years pouring money into U.S. stocks. That's obviously started to change. We saw really a rise in international attention last year. Why should investors be looking overseas for opportunity?
You know, it's a great question. It's something that's been asked of us many times in many conversations. You know, as we look at the world through our lens, as we celebrate WisdomTree's 20th anniversary, it's sort of a fitting time to reflect on some of the lessons we've learned through multiple market cycles, crises, periods of uncertainty. You know, one of the most important lessons that is successful investing, it really comes from predicting the next headline. You know, few investors consistently forecast interest rates, elections, geopolitical events, or market, tuning events with any accuracy at all. What has proven far more valuable is identifying durable long-term trends that can reshape economies and create opportunities of many, many years. Today, one of those trends is unfolding in Europe. You know, after decades, and I truly mean decades of underinvestment, Europe is undergoing a historic shift in its approach towards security and defense, and governments across the continent are increasing military spending, modernizing defense capabilities, rebuilding critical supply chains, investing in the next generation of defense technologies. You know, what began as a response to heightened geopolitical tensions has evolved into a broader commitment to long-term strategic autonomy and security preparedness. I do think that we're seeing a shift there, and what was an explosive demand last year has certainly, quieted down a little bit, but I don't think that's going to change.
So if I already own Lockheed, Raytheon, RTX, Northrop Grumman, why do I need European defense though? What am I getting that I can't get in the US?
You know, if you look at it, right, this isn't a short-term geopolitical trade. You know, we believe Europe is in the early stages of a multi-year defense investment cycle, supported by NATO spending commitments, national defense initiatives, and sustained investments in aerospace and communications, cybersecurity, intelligence systems, and military equipment. And if you look at what this fund does, it really focuses on those funds that are in fact, benefiting from the European expenditure that's happening. So, that brings us back to the lessons we've learned over the last 20 years. I mean, again, if you look at the American funds, that's great. But we certainly think there's ways to go in actually protecting European defenses as well.
Okay, yes, I should mention this is an ETF spotlight. The fund is WDEF, the WisdomTree Europe Defense Fund. What does it own? And talk to us a bit more about what exposure it offers that might not be available in a traditional portfolio.
So right now the stock owns about 38 securities, 40 securities roughly, all European-based companies that develop different types of drone technologies or defense technologies. It is a fund that is, really geared towards the rearmament of, or the rearmament cycle that Europe is currently in. There's also, some U.S. domiciled stocks there, but it's mostly European defense stocks.
Many of the stocks, though, as we talked about, had a strong run in 2025. So is the easy money already gone?
I wouldn't say it is. I mean, because it's a long-term cycle that's happening here. I mean, you look at some of the individual securities like Thales or Leonardo Spar. I mean, there's some great securities that are sort of under the radar that us in America don't get to invest in, or we don't even look at. So that the average investor would never typically look at these types of, stocks. And I do think it's a chance for those that are heavily concentrated. If you look across the different funds and ETFs or even portfolios that people have, they'll have the Raytheons, they'll have the big domestic U.S. stocks. This is a way for you to, really, deconcentrate or de-risk your portfolio by investing in European type stocks. So I don't think the run is over. I think it's a long-term play.
If an investor wants exposure, how much of a portfolio does something like European defense deserve? Is it sort of like a satellite position or something more meaningful?
It all depends on your position. not only where your account is located or where you invest, but what's your overall portfolio look like. The typical portfolio is 60/40, maybe even 70/30 equities to fixed income, and then a portion of that equities position could be positioned into European securities. Sometimes you see that as much as 10% in America, sometimes it's 15%, and that might span across different parts of the European investment landscape as well. So that may have some emerging markets in it and so forth. So again, it depends on your overall risk and your overall portfolio setup.
What is the biggest risk investors need to understand before investing in European defense?
Well, there's a couple of different risks there, right? So, there may be currency risks, there may be geopolitical risks. The typical risks that you would find in everyday portfolios certainly apply here, but the added risks on this may be some currency fluctuations and maybe geopolitical risks that are experienced over in Europe and not here. So that might be a heightened level as well.
I'm curious, just because you have an interesting perspective at Wisdom Tree, more broadly, where do you think the average U.S. investor is overexposed and underexposed today?
It's clear that there's an exposure to a half a dozen, 10 different stocks in the U.S. by everybody. Because if you're a cap weighted portfolio investor, so a beta portfolio, you're going to be heavily invested in probably a dozen names. That's the biggest risk that people don't understand they have right now. And the best way to alleviate that is certainly take a look at the underlying holdings of your portfolio and try to diversify a little bit more. You can stay within a tech sector, but to stay within a dozen or so names and having that be 30 or 40% of your holdings, that's risk that I don't think it's unintended risk. I don't think the average investor has right now or realizes.
Yep. Okay, and just to bring it back to European defense and the fund, WDEF, I'm taking a look. It's only up about 1% year to date, so underperforming the broader market. Yet you say that this is a kind of a structural long-term play. This is happening at a time when the geopolitical climate is definitely very tense. Tensions are high. What makes you confident that this will ultimately pay off for more than just what we saw last year?
Well, again, back to your point, how much exposure should you have in Europe? And whatever that really is within your portfolio, you would look at this and you would compare this to the MSCI European index. At the end of March, that index was down about 3%. This was up about 4%. So you still see a big shift in the return cycles there. Since then, it's sort of leveled out a little bit more, but I think we're still up against the MSCI European index.
So the strongest argument just to sum things up, what's the strongest argument for owning European defense today?
You're seeing geopolitical actions all over the world, and you're seeing different countries and groups of countries starting to rearm themselves. Again, back to European countries, they've been underinvesting in defense for decades. Now's a time where we're going to see a heightened period of unrest and people starting really to reinvest in their defensive capabilities. And I think we're going to see this accelerate going into the next 5 to 10 years. So I think it's an important place to play. And I certainly think it's an important place for a portion of your portfolio.
Great. We'll leave it there. Joe Grogan, Head of Distribution Americas at Wisdom Tree. Thank you so much. Really appreciate it.
Thank you so much for having us. This was great.
If you enjoyed this ETF Spotlight, check out our full interview with Wayne Pinello, where he breaks down how to survive the next market drop without panic selling.